Welcome to the StockMiner.com studios. I'm your stockminer, Brian Johnson. Another update today in the markets. Everything up about 1%, with the S&P being a laggard today. Dow and Nasdaq up 1%. S&P's kind of behind all of that when it was all said and done with for the day. But as it is, we broke some of these overhead levels we were looking at. You can see kind of the mess with this blue line in through here for the course of the week. But once we got back and above it, we did the little consolidation here and then a pop to the upside. You guys can make this into an inverse head and shoulders, and now we broke that. We can look at that as maybe a 1, 2, 3. Puts an A up here. Maybe there's some sort of a 1, 2, 3. This is a B down here, and now we're working on a 1, 2, 3, 4, 5 C wave to finish somewhere up in here, and then that gives us wave 2. There's a million different counts we can go with here, but those are certainly all valid, I believe, at this point in time. And what we'll be watching for is Monday. Are we going to hold this blue line? Are we going to hold, more importantly, this 10,400-ish area that we just broke today? Very tough to take and hold this trade over the weekend, because we don't know what's going to happen over the weekend. Any kind of really bad news might start the market down. But as long as things stay calm and nothing big comes out over the weekend, I don't see any reason why we couldn't creep a little higher. I think we should all be watching that closely coming into Monday's trading. But I like it. If you guys took the trade and happened to hold over the weekend, yeah, a little bit speculative to hold over the weekend, but you know what? Why not? Took the break. It was a good break. Got pretty decent volume behind it. Overall, the day wasn't up a ton. There wasn't a lot of volume to the day. But we did see the break up and above here. Market's just doing what they always do, kind of leaving you in limbo coming into the weekend, making you decide, what do I do? Do I stick with it? Do I not? Now, if we have a gap up come Monday morning, everybody that got out or didn't take the trade is going to go, oh, man, I should have took that trade Friday afternoon. And those that maybe we see a gap down, of course, are going to be, oh, man, I knew I shouldn't have held over the weekend. It's so funny how the markets play those little games with you. Stupid markets. Dow on a daily, though, look at this. We did break that blue line. We did break the 200-day moving average. Coming up to this, now this is a pretty major overhead resistance area. That was right around the high, 10,450, right about in here. That is a very big level of overhead resistance. Now that we broke the blue line and the 200, I will give the bears a day or two to kind of come back down here. But for you that are looking for swing trades, you're going to want to make sure that this blue line holds on the way back down. If you're looking to also swing trade this coming into next week, and we'll talk more about it this weekend, you want to break up and over this level here. So up and over about 10,500, I think, still gives you a great entry to the long side. NDX on a 60-minute, you can see how this blue line on this particular chart didn't get choppy and ugly like the Dow did. It stayed pretty. This is very nice. Worked very well all the way up. We broke that overhead resistance at about 1860, 1865-ish. I even mentioned 1870 for the more conservative traders. That would have made you a little bit of money towards the end of the day. 1880, the next stop, and then I believe probably 1910-ish or so before the NASDAQ sees some more. For the week, though, let's just... it should be discussed that for the week, the market did very well. All of them up over the course of the week, even with the volatility we saw. The gap up, run down, gap up, run up, run. It was crazy what happened during the course of the week. But at the end of it, we did break this overhead resistance. This is the stuff that like the S&P and the Dow are fighting with right now, but I think this looks very encouraging for the rest of the markets if the NASDAQ has in fact already broken up and over. So we may see that once again, about that 1910, 1915 mark we'll be watching for next week. We did on a weekly see us up 4% for the week, which gets us back up and over this blue line. So that could have some serious ramifications for the markets in the near term. That might start to change some bias depending on what we see at the end of next week. I always like to give it a week to kind of fix itself here. So we'll be watching this closely. I'll certainly, just so you know, I will be doing more of this type of work with my subscribers. So if you guys are interested in what I'm going to be watching on the bigger time scales, certainly worth your time to try the newsletter, the subscribers newsletter. I go into a lot more detail on that, by the way. The SPX on a 60-minute breaking up and over this area, which was the 1100 area to close at 1102. Once again, very difficult to hold over the course of a weekend. But the break is the break, and if we just go ahead and look at the daily, you can see us just inching our way up and over this level. I still think that 1113 is very possible at this time. You know why? Because the charts are what they are, guys. To me, the charts just are what they are. I mean, we can second guess ourselves all weekend long, and obviously nobody knows what's going to happen come Monday morning, but for me, the chart just is what it is. And it is bullish right now, at least in the short term. This is bullish, having closed back up above here. So this area up here, certainly a very achievable goal, I think, by the S&P. For the week, once again, up and over the 50-week moving average, up for the week, and up over the blue line. So lots of strength from the weekly charts at this moment. Still have a few things I want to see broken before I get overly bullish. But for the time being, it's got to be short-term bullish for sure. Here we are, another move down on the VIX. You can see it holding at the 200. This thing is just, it's still very indecisive. Confirmation, though, we moved down. The markets moved up. The VIX moved down. So for the week, we are still well within where we need to be. But look at this. The VIX now closing below the 50-week moving average. And if that continues its onslaught to the downside, that should bring us back into this area here, which definitely means more bullishness in the markets. Apple saw a rise of about $1 today. Just nothing but consolidation here the last couple days. Going straight sideways, holding at what? Oh yeah, something about that 260 level I mentioned. I still like above the 260 level for a long in Apple. From a daily, you can see it consolidating twice here after earnings. Look at, here's the move up before, here was the gap up after, and then straight down. Not what you want to see for bullish Apple, but this kind of redeems itself. This is okay. All right. 2 days sideways like this, holding above all of the moving averages. Just can't seem to break that 260, but I'll talk more about that this week, and that's where I'm really looking. And holding the 20-week moving average, as we spoke about. FAS on a 60-minute came right up into this overhead resistance, giving you a little opportunity to make some trades today. Would have had to be very nimble on that one, but stopping right where we would have expected it to. From a daily, didn't quite make the 50-day moving average, but it got stopped by that other overhead resistance we saw on the 60. FAS on a 60-minute starting to bleed its way downward. Somewhere below 1450 was an entry to the downside. That would have given you a good 20-30 cents today. And then once again, a more conservative entries below 14 or ultimately below 1350 if you really want to get short the FAZ. From a daily here, you can see where we played around with this blue line for the longest time, but by the time the week was over, the blue line held to the bear side here. So we saw a run up, numerous attempts, or a couple attempts to try to get through it. Just too much selling up there. People getting rid of their stuff. Right below 14, still a good entry. Watching it into next week. But overall for the week, look what we're seeing on FAS and FAZ. Chop. See? 1, 2, 3, 4, 5. This just moved us down for the week, and the previous week, 1, 2, 3, 4, basically 5 here, moved us nowhere. So we're still just moving sideways here on FAS, FAZ. Gotta remain an intraday trader when it comes to that stuff. The financials are, I don't know. Is there manipulation in here? Is there help by the government to keep these things up and above, the bank's heads above water? Is there just flat out indecision in what to do with the market? Who knows? It's anybody's guess at this point. But the charts do tell us that they obviously have no clue which direction they want to go next. It's all sideways action. Stick with your intraday trading of these particular ETFs. Okay, so for the week, guys, we did see some volatility. That's for sure. That's an understatement. But you'll notice that by the end of the week, everything did finish up. It was a bullish week. Not bad volume either the last couple of days. So the moves by the bulls, not too bad. That last Friday dip that we saw, heavy on the volume, didn't seem to make a difference when we really got into the trading of this week. We moved right back up, started this consolidation sideways, and the bulls have been able to hold ever since. So I'll be back with you again on Sunday. Give me a couple days to kind of analyze this and chew on it for a while, dig into it a little bit deeper, and I will see you again Sunday afternoon. Bye.